All right, everyone. I, Sophia Quinn, am your investor professor. And this video, we are going to talk about balance sheets. Because before you purchase a stock, okay, and we talked about, what kinds of stocks to purchase, the stocks to pay attention to. But before you actually go in to spend that money, you have to, please, you have to take a picture. You can either take a picture if you want to, but you need to take a peek into the company's balance sheet. Okay. So a company's balance sheet is a company's financial statement. It's we can say a small tidbit of everything that is involved in the company's wealth or not. So the calculation is liabilities plus the shareholder's equity equals the company's assets, okay? And that there are three main sections of a balance sheet. There's the assets, the liabilities, and the net worth. So the assets minus the liabilities equals your net worth. So when you're looking at assets, there's current assets and non-current assets. The current assets are short term, but they include the cash. And I always like to look at the cash. You will find that a lot of companies run on negative cash flow. That is actually pretty surprising, but a lot of companies actually do run on negative cash flow. But that's in the current assets. The long-term assets are intangible assets such as trademarks or patents, and also machinery. And this especially if you're looking into manufacturing stocks. And also real estate falls under non-current assets as a long-term assets. When you want to look at a company's liabilities, of course, right? What do they owe? So that's looking at their accounts payable, which are the bills and suppliers that are due. You want to look at debt, just overall, you want to understand how much debt this company is in. And there are there's current liabilities and non-current liabilities. The non-current liabilities are long-term debts such as bank loans, bonds, mortgages, and things like pensions. If they give their employees pensions, that's considered long-term debt for the company, okay? Then after that, we look at the shareholder equity, which is the net worth, which is the subtraction, right? The sum of the subtraction between the assets and liabilities. So the shareholder net worth, which you find in there, is also the common stock, which is the initial investment that the actual owners and shareholders put into a company. That's something to note, right? Like, is this just bankrolled by a few guys, right? Then there is the retained earnings, which is the profits that are reinvested into the companies. That one is something that I definitely look at. What is the company's retained earnings? Because I want to understand whether the company reinvests its earnings back into the company and not just into the pockets of the owners or the shareholders, right? I want to know, because that kind of shows a good management and it shows a long-term vision for the company if they are reinvesting their net worth back into the company, okay? And so when you're analyzing these things, you need to be looking for efficiency, right? How are they handling their money? Their debt to equity ratio, right? Do they have more debt than what they're actually pulling in? And their liabilities ratio, whether they owe too many people money, okay? So we're going to use Apple as our example because that is our big wig, okay? And looking in the Apple balance sheet, like I discussed before, Apple is a cash cow. They have currently cash reserve of $60 billion. So that's, you can say, okay, that's something to note. And then their debt to income ratio is 1.5. And then their ROI, which is a return on equity, is 30%. So strong profitability. So just to note, when you're looking at a stock, in Fidelity, if you pull up the stock and you go into research, there may be a balance sheet there. Since these are publicly traded companies, they are required to have their balance sheet somewhere for you to be able to take a look at them. But please do not purchase a stock before you peek into the balance sheet, because the numbers don't lie. So I hope you take this tip into how you are going to purchase your next stock, looking at the balance sheet, understanding the equity, understanding the liabilities, and understanding the I would say the debt to income ratio and the net worth. How much is a company worth? Because, two things can be happening. It can be a stock that you're very familiar with. It can be a stock that you hear like, oh my God, it's a great stock. But then when you look in that balance sheet and find out that they owe a lot of money, that should give you some pause, right? So when we talked about in the last videos, bankruptcies, right? Because when you get to owing people a lot of money, sometimes you need to file for bankruptcy. That's not always a bad thing for a company's history, but it is something that happens. And looking at a company's balance sheet may help you in determining whether this company is a good long-term investment. Especially those of you who do your calls and puts, got to look in the balance sheet. Got to look in the balance sheet to understand the actual financial health of the company that you're putting out trades for a really long time. Okay, so I hope that's helpful. Please drop in the comments if you have any questions about a company's balance sheet. And if you want to explore a particular company's balance sheet, feel free to let me know. Follow me on my YouTube, Investor Professor 25, and Instagram, Investor Professor 25. And that's it.